Good afternoon, everyone. I'm 27 Jordan guy, and today AMC closed at 35.23 with the after hours of 35.13. Today is October 28th, 2021, and we will be discussing three things. One, why we might see $40 by November 3rd. Two, the technical analysis that I can bring forth on this stock due to recent activities, and why the squeeze needs to happen. Before we start anything, though, I'd like to give a good shout out to someone I met who was very genuine in the Discord. His name is esternaefil. Actually, I have the note right here. So this is his Discord. His father recently went to the hospital for something with private matter, and I just wanted to give him a shout out just to make sure everything was good. Does a lot of really good due diligence on Twitter, so you guys could go check him out. I'm pretty sure that's his Twitter. I don't know, but shout out my man, and hopefully everything goes well and bodes well for him. Dude's a fucking trooper. The shit happened, and 24 hours later, he was back on the fucking Discord talking about the prices of the stock again. Insane to me, but shout out to him. Um, so now we're gonna get into a couple of things. Um, for my people out there that are worried about this price action, please do yourself a favor and hold through the loss. That is not financial advice. I will retrace that statement right now. I'm not giving you financial advice. I'm going to hold through this. I'm just saying there might be some upside. That's not financial advice. Um, so 40 retest by earnings or November 3rd, end of day, is my first prediction. You may be asking why. So right here is where I believe that we are. If you take a look at the downtrend, you'll see this sort of push up and then this slump start to occur, which is the same thing that we saw here, push up and a slump. I did say a couple of days ago that we were around the May 6th area, give or take, because you have different price ranges now, so you may see more drastic moves up here, and some moves may take longer to manifest. However, the key difference between here at May 7th and here at October 28th is the fact that we had an earnings push up towards the late day that helped us get to where we are, which is why I bought in around these levels. So because of that, the catalyst for us is expected to come around November 1st to the 3rd, which would give us the cushion needed to compensate for the move that was needed right here to be present right here, if that makes sense. So by then, I would expect that we do a fast attack, similar to something like this, on the 0.618 level to retest this 40.45 before November 3rd, end of day. And especially because earnings is expected to come out November 1st. I believe TradingView is wrong. So now let's get into the reasons why the squeeze needs to happen. This is going to be a short video, probably 7 minutes, 8 minutes. So one, you have equilibrium. Credit to Astro, because he talked about how when things get tuned out of balance by force, you're going to have the same reaction come back to haunt you. And you have a lot of these institutions that are probably over leveraged in their short positions to where if they were to cover now instead of where this price is continually showing signs that it's going, you're going to have a situation where not only are you formulating a greater loss, but you're also going to be bag holding at the end of this as a smaller institution, a smaller hedge fund, who held a short position and is now worrisome of holding through these swings and wondering how long the squeeze will be able to sustain itself, which may not allow you the proper amount of time to even cover, because you have a lot of people that have a lot of blood out for these hedge funds, especially what happened back with the March on Wall Street in 2011, where you had people just fucking laughing at these protesters on the street. There's a lot of bad blood about this. Number two is the taxes. Let's be real. The IRS knows about this play. If they didn't, they'd be fucking stupid. This is the biggest play on Wall Street in a minute. I've you never seen a collective of 4 million investors sharing one common goal at the same time. They didn't prepare for this. This is where we are right now. If anyone else tries to make you doubt this play, this is supposed to be an unsustainable play, and we're still consolidating at the $35 level. In January, this was at $1. Okay, so let's just be real here. This is bullish as fuck. Number 3 is P&L sheets. So I believe that, with hedge funds that have clients, you have to show results of where their money is going. And if they see that you have this AMC wraparound loss that you've probably took in maybe 40% off of your original position, which is a really bad loss for a hedge fund. I mean, we could hold something like that because we're private investors, but anything like above a 5% loss for a hedge fund is just horrible because they're in competition with each other. Clients are going to look at you like you're fucking crazy, especially the clients that don't have the stomach to hold through volatile swings like this. I mean, me personally, I'm down 50% on my net account value. I don't give a fuck though, because I know, for one, this could reach a level where I could get my money back if all else fails. Just based off of fundamentals alone, we need to reach the 100 to the 200 area to cover all this downside that we've been experiencing for the past couple of months. So now I'll get into the technical analysis part. This part shouldn't take too long. I don't want to keep you guys held up. This is why I think I found the bottom. So first off, I would like to talk about the MACD indicator, and I feel like it doesn't get a lot of love. I'll go ahead and go with the time zones for the fib, and I'll pull up this chart that I made. So right here, you'll see that the time zones are in correlation with each other based off of the fractals that formed. And I drew it out so that way you could possibly predict like a way to know when our next target will be hit based off of what we saw in correlation with these time zones. But that's not the important part for this video. I wanted to talk about the MACD. Now, with a MACD, it consists of a MACD line and a signal indicator. Usually when the signal indicator crosses over the MACD line in blue, that indicates that, a suspected downtrend is incoming. And as you can see, it's held its validation pretty well throughout this whole cycle that we've been experiencing. But as you could tell, the speed of the MACD indicator is starting to flip more frequently, which is a very, very good sign that we're truly oversold to the brim on the daily level. And what do I mean by that? Well, I'm going to pull up the RSI. It's called the relative strength index. So basically, it's I like to call it the over and under. You know what I mean? Because you can tell when you're swimming under the water too much and when you need to reemerge from the surface. Right now, we're sitting below the midpoint of the RSI, which is around 50 by about 10 points. So this is very, very oversold for the daily chart. And we're sort of making a higher low, especially on this RSI as well, which is also bullish. While the MACD line is starting to converge back with the signal indicator, which should signal us some upside, hopefully suspected by earnings, or even by November 3rd, which is my hard date for this to reach 40 again. Okay, so now I'm gonna go back to this, and we'll go to the next point. And this is why I wrote this shit down, so that way I don't forget. We also confirmed a higher low on the 45-minute, and I'm pretty sure we did on the daily. I haven't checked yet, but I like to check the 45-minute because it gives you really good, strong movements that you can really relate to past events. As you can see here, this is a confirmed trend line. So based off of this going into Friday, I don't see us going below 35. I'll just draw it out for you guys right here. Just, something like, something like this. If we were to end our day on Friday, I wouldn't expect us to go below 35. This brings me to my conclusion that, on Friday, we should see a test of the 36.29 and a pin between 36 to 35 to try to fuck people over who have maybe puts or calls. I mean, it just depends on what the market maker sees and if it's ready to bounce out of this zone to test the upper range of the trading range that we're in, which currently for the smaller degree fractal has a high of $44. up here. Now, I'll get into my next point. So we covered these. Oh, credit to Jen Collado for calling out this inverse head and shoulders that was found between the September 13th up until he noticed it around the week of the 5th, I want to say. I think it was around the week of the 11th he noticed that we were in an inverse head and shoulders pattern. And we broke out very nicely on it, confirming that we could have held. Kind of did sort of a false breakout on the 45-minute. We did a little bounce off, couldn't get enough strength in terms of the volume, and the sell-off continues. Now, I would like to point out the reason why I believe we're in a microfractal is because we're forming the same exact inverse head and shoulders pattern on a smaller scale, encapsulated by this bigger fractal. So because of that, now you're dealing with two different retracement resistances that you have to break through. One right here, and a retracement right here if I were to draw it. I don't feel like drawing it though. So because of that, now I'm more confident in that if Monday we could break above this $36 level by Monday, then we're well on track to be able to see $40 by either earnings or at the latest by the end of the day on November 3rd. Especially if we have this pattern forming right here, which is considered a bull crawl, which is very bullish because you have an accumulation of buying pressure that's basically testing to see if it's comfortable at these different levels. So then once we break through our equilibrium price, I expect a fast attack of the $51 level in a later date, which I'll discuss once we get there. All right, so I'm sticking to my guns, 39 to 45 to 40.45 by November 3rd EOD, end of day. If we broke through the 40.5 through the 40.99, you know how I like to use ranges. That's our price. We would have to worry about the next macrofractal resistances. So not only do we have to break through these, but in between here, we have other resistances that we would have to worry about. For example, the prominent one is at the $45 level. We saw a lot of gaps being filled right here on a smaller scale, but it wasn't too bad, especially when we got to here, because we kind of mustered the strength to see if we could retest these levels, and we had a successful breakout up until we got to the high of this, and then we sort of had a false breakdown. I mean, it kind of turned into a false breakout, but it wasn't really. It was just a sustainable move that was fueled by volume. So I expect the next time we test this, we break it very. We get rejected, retrace to a higher level, higher than here, and then we actually have a successful breakout in a shorter period of time. So all time frames were really oversold yesterday, which it's no surprise to me why we entered green. And this acceleration in the chart, you may be wondering why the prediction didn't play out right here, and this is one of my last points. Because if you look here, earnings was actually on May 7th, so it kind of provided the catalyst to have a necessary boost for us. I remember seeing as high as at least 11%, 11 to 12% towards the end of the day, and then we closed out at 7% up on the day, and it created a bullish outlook for us to be able to break through and get to the next level of the fractal. So because of that, we didn't have earnings here. So we're just forming the same formation. It's just not as strong because we don't have a catalyst. However, we can compensate for that catalyst appearing between November 1st and the 3rd if Adam Aaron decides I want to release earnings that day. And we should be able to see a very strong attack of 40.45 if earnings are beat. So what to expect going into Friday? Like I said, a $35 to $36 pin with a possible high of 36.29. It kind of usually those patterns kind of look like this, like a heartbeat monitor. When you have your QRS wave, it's very weird. I don't know. I don't like the market. Now, the last thing I'll say is, over time I'll start to check off this checklist, and if I'm wrong on certain things, I'll adjust. I will admit that I'm wrong as well. But, yeah, that's pretty much the end of the video. Appreciate it. Thank you.